Losing sucks. Drawdowns suck. Not knowing when to get out of a trade, that really sucks. All right. How you doing, friends? It is Thursday, August 25th, but you know that. It's 3:15, and it is time for the final hour trade. 0 days to expiration. That's what we do here. And this is an experimental trade coming out of our service that we just broadcast out there so you can get an idea of what we do. This experimental trade isn't really part of our regular strategy. We do the experiments to explore new strategies. So that's what this is. I've committed to 100 trades. We are now on, I believe now on trade 76 out of 100. And then when we finish that, we'll come up with another variation of that trade and do another 100 and so on and so on. It's a lot of fun. So today in our regular service was another winner. Surprise, surprise. And this one probably, well, actually there were two winners. The second one, I don't know that everybody took that trade, but it was put out there as an alternative after the first one profited. And I think the first one was not one of our biggest winners, still 85 to 150%, something like that. But the second one, if you had taken that, was definitely up in the 150, 200% range. And it's actually still going. As a matter of fact, where is that thing? Where is that sucker? All right, let's see. We'll just go over to here and we'll see. Oh, wow. It is working its way into the profit tent. It is in the profit tent. So let's see. The original trade. Yeah, that's looking pretty good. We like that. So getting back to what I had said at the beginning, that losing sucks. Drawdowns really suck, especially those forever drawdowns. Man, they are so bad. Yeah, let me get back to what I was talking about. I can't find it. Oh, there it is. And we'll get back to the big head. There we go. So all of these questions we answer in this service. Of course, the biggest one is, losing, not knowing when to get out of a trade is another great pain point for people. And then drawdowns, which is the accumulation of many losers. How do you avoid that? Well, first of all, you have to start off with, a lot of people say you need to start off with a strategy with edge, but that goes without question. No matter what you're trading, you need a strategy with edge. Unfortunately, a lot of people don't even understand what that means. And I know that a lot of people in the trading world, retail traders like you, all of you, and even some professional traders, think that a high probability strategy is the way to go. You really think that winning a lot of small little wins is definitely better than not winning at all. And then those big losses, the big risk, you can sweep that away with just depth, precision, and I don't know how. They call it risk management. I call it loser management. And that is a fundamental flaw in most people's strategies, is the idea that you can have a positive long-term outcome from a high probability strategy. It's just not true. It's counterintuitive for most people. Counterintuitive. because it just seems like, well, man, if I'm winning all the time. The problem is that you're not looking at the big picture. How much are you winning all the time compared to how much do you lose when you lose? If you're winning this much all the time, but you're losing this much when you do lose, regardless of how few times that is, and it's really more often than you think, regardless of how many times that is, it wipes out everything. And the dirty little secret is that even with a high probability trade, that does not mean you can't lose multiple times in a row, and you can, and you will. There is no way to escape that. None. You can put in all the stops you want and all the trailing stops and this and that. It's going to happen. You're going to screw up. Guaranteed. You're going to fat finger trades. You're going to trip over cords. Someone's going to call you away from your computer. You're going to have to take a dump. And when you take that dump, I guarantee your trade is going to go into the dump. It's going to happen. It always does. How do you get around it? Well, first of all, you need to change your strategy. And that's what we do here. We do what is essentially what most pros do. And that is, we don't focus on these high probability strategies because they are losers in the long run. They do not have a positive expectancy. They have a negative expectancy. If they had a positive expectancy, you would think that all the traders out there in the world, there would be more of them winning. When 98% of all day traders lose. How is that possible? Well, it's mostly because they follow the common broker narrative. And that's trade a lot, trade by the law of large numbers, put on your pop and rock, probability of profit up there at like 95%. Return on capital, we'll just set that at what? Maybe 10 or 15, maybe 20%. No, I'm going to dial it up to 25%. And you just keep on putting on trades that you've convinced yourself will follow that paradigm. And you put on enough of them. And now you are painting your future. The future that you will finally attain. The pop and rock sometime way down the line. If you just keep on putting on those trades and it never happens. If it did, everybody would be doing it. Everybody would be happy. And we wouldn't have 98% losers in the day trading world. So ask yourself, is it a fallacy? Is it just something that the brokers made up for one purpose only, to get you to create transactions? Because that's how they make money. They do not make money by you making money. I know that seems a little counterintuitive too. A broker does not make money when you make money. I mean, you can make money and they can make money, and you can lose money. In other words, they don't care. What they do care about is getting you to trade the way they want. And the way they want is a way that is not conducive for you. They want you to create transactions. Lots and lots and lots of transactions. What do you think a sell-side analyst is all about? Those guys that go on CNBC, they're out there to promote stuff, to get you to push buttons. That's what it's all about. Look, I've been in this industry for 30 plus years. I put the first online brokerages online. I have worked with every brokerage, institution, virtually every investment bank out there. Help them perpetuate this thing. This is what they do. They're not after your interest at all. They're after your commissions. So again, ask yourself, what is the most painful thing that you have in trading? And it is losing. It's losing a lot and losing regularly. It may even seem like you're losing regularly, even with a high probability strategy. But drawdowns, they are killer. How do you get out of that narrative? You don't play the game. You don't play the broker's game. Do what the pros do. You take tiny little risks, very tiny little risk. You trade super small for the potential of outsized profits. Now, here's the difference. When you go the other way, think of this. You have maximum profit like this. maximum loss like this. This is the normal way people trade. The difference between this and this, the spectrum, is all negative. Now go the other way. Little risk, big profit. The spectrum between that and this is all positive, right? So even if you win a lot of these, if you win a few of the spectrum and the big wins, you far outpace the other way. I don't know if that was an appropriate or if that settled with you in your mind, if you get that, but that's what it really comes down to. Virtually every entrepreneur, every venture capitalist, every billionaire out there, every successful businessman, all follow the same strategy. Take tiny little risks, do a lot of them, try a lot until you get that big winner. You advance, you try a little bit more, spread out a little bit more. I can't reach the cough button. All right, so enough of that. Let's take a look at where we are on our service, and okay, we reached a new all-time high today. Now, after 65 days of trading, we are at a net profit of $4,000. So this is starting with a $23,000 account, $4,000. Let's see, what is that? That's about what, 17, 18%, I think? Let's do the calculation. So 4,035 divided by 23,000. Let's do that again. 4,035 divided by 23,000. Yeah, 17.5%. So after 2 months, we're at about 17.5%. Now, I don't expect to maintain that kind of return every single month. I'd be happy if I get 4 or 5%. That would be great. But I'll tell you, nearly 9% per month, that's something that is to shoot for. I think with a $23,000 account, you can probably maintain that about 80% of the time. The other 20% of the time, it's going to be something less. So that's our system. And what we do is asymmetric trades, tiny little risks, huge potential profit. We're looking for those fat tail winners. That's what you want. You want a distribution of winners where you have a lot of tiny losses, a lot of tiny and medium-sized wins, and a few big outsized wins, the fat tail. And that's exactly what we have. Let me just sort of demonstrate that. You'll see the frequency of our returns, and that's what you're seeing right here. This is a return distribution of my actual trades, and you'll see that there's a bunch of small losses, a little bit more small wins, a few medium-sized wins, and some outsized winners. We had some of those outside winners this past week, and a couple of medium-sized winners, and a small win. So that's how we distribute these trades. And that's the winning formula. The win rate on this is only 54%. It's not 95% like everybody else. What's going on with those guys with 95% win rates, but they have these huge, magnificent drawdowns and losing strategies? How is that possible with a 95% win rate? And how is it possible that we have half that win rate and blow them away? Literally blow them away consistently with little drawdowns, tiny drawdowns. So our drawdown over this period is only under 3%. And it really came after a period of going sideways during this bear market run. I don't know what it was about that bear market rally. It just, I don't know, just couldn't break out. And then finally, now that it has kind of rolled over, it's, off to the races. We've just been on this kind of winning streak. And that happens. So there you go. That's our performance. Now, last year, we had similar performance to that. I think our overall win rate last year was a little bit higher than 54%. It was around 65%. But I took a small account and tripled it in 9 months. So if I keep on going at this rate, this account after a year, the 23,000 should probably double, maybe a little bit more, something like that. Can't tell. You never know what's going to happen, but it seems that that's the track that we're on. All right. Now, why am I stalling for the final hour trade? Because I don't think that there is a damn good final hour trade. All right. Let's see here. Bring back the big head. And I'll find the chart. And we'll go back to the chart. All right. So we've moved outside of the T1 volume node. That's this red area here. And these are past trades. This right here in the middle was yesterday's trade, and this right here was the day before yesterday. All winners. Monday was also a winner. Today was a winner. And the yellow lines are things that I draw in there after analysis in the morning and then picking market direction. You can see pretty much spot on. Right? And that's after our analysis using volume profile. We do not use any technical indicators at all. That's another ruse or sort of a false prophet. Look at it that, yeah. It's a fallacy that technical indicators actually give you an edge. They do not. Volume profile really is the most powerful way to look at the markets. It is the way that pros look at it. It's the way they've looked at it since the very beginning of the stock market. And it tells you where support and resistance are. It tells you where the liquidity zones are, where the lack of liquidity is. It tells you also behavioral aspects of the market, what to expect. And from that, we can devise scenarios that are highly accurate. And for us, sometimes it's just unknowable, and that's why our win rate is relatively low. But what we're trying to do is take asymmetric trades where we take our out-of-the-money butterflies, put them at a place where we think price is most likely to be, make it wide enough so that we cover a large enough swath there to intercept price. Now, what happens with our methodology is that about 10% of the time we actually pin those trades where we make these outsized profits. And about 40% of the time we get something between a really big win and a smaller win. A lot of times our wins are actually outside of the profit tent of the butterfly. So that's kind of remarkable. The rest of the time, when we lose, tiny little losses, rather insignificant. Sometimes we take the full loss. Sometimes we can recover a little bit. But it's of little consequence because we don't actually manage our risk because our risk is built into every trade. We know we have defined risk. What we do instead, which is, again, the opposite of what every other trader does, what you spend most of your time doing, and that is managing your risk. I like to say managing your losses, where remember I used the spectrum thing? Big risk, tiny wins, and then the big spectrum. Yeah, we need to go to the big head for that. So again, you go big risk, tiny profits, and then the big spectrum between there, which is mostly negative. We flip that by taking small risks, huge profits, and now the spectrum is mostly positive. See that? That's what we do that's different. All right, let's take a roll call here. I'm sorry for leaving everybody hanging. We got Craig. How you doing, Craig? And Anton Green. Thank you very much. He says, keep it up because we're winning so much. We're going on admittedly, we're going on a nice win streak, and that's nice. There are times when we're not, our win streak over the past couple of weeks is probably up around 80-85%, which is highly unusual for this strategy. Before that, we were probably between 35 and 40%. And even with that, we can still have a nice winning strategy. But when you're hitting 85% or more, I mean, it's mind-blowing. Hey, Clayton, how you doing? And we have 1, 2, 3, Happy Street. Yeah, another great day. Chris, how you doing? Okay, Anton has something to say. He says, asking about your regular service, what time frame should I be in front of my computer on an average? I've been trading part-time, so I want to understand better when you initiate and close the trade. Most of our trades are open between 10:30 and noon, and we're in the trade anywhere from an hour to the end of the day. Obviously, if we go all the way to the end of the day with the trade, we probably have a trade that's inside the profit tent going for a much larger outsized win. Usually, we're somewhere near the edges of the strategy, and it's, a smaller win, which is usually anywhere from 50 to 150% return. And when I say smaller and I use those numbers, that might be mind-blowing to most of you out there thinking, small is 50 to 150%? That's right. To us, that is small. Where most traders are trying to eke out a 5 or a 10, or if they get 30%, they think they're gods. So, yeah, we put on trades late morning. You have to monitor it. You can set alerts and everything to keep you abreast of where price is. And then once, usually you can tell whether or not it's going to be a shortened day and whether or not you want to get out early, or if it's going to move on into the later parts of the day where things get kind of exciting. So you still monitor it. We have objective ways of looking at both situations so that you can set alerts and figure out where you're going to be. I've been trading part-time, so I want to understand better when you initiate and close the trade. So that's the answer, like after an hour or two or later into the day. We like the later into the day, although sometimes we can do 250, 300% profit after being only in for an hour or two. Those are a little bit more rare, but that happens. And it happened a couple times this week. All right. Let's see. Oh, another question by Anton. Have you worked with HFTs out there? Yeah. Not on the actual high frequency systems themselves, but the underlying system hardware and that sort of thing, the infrastructure. How you doing, Aaron? He says, I think it stands for high frequency traders. Yes. That's because that's what Hans asked. What is HFT? Another question from Anton. I think I was calling him Aaron there for a second. Have you tried the same strategy with further out of the time points, no zero DTEs? No, just no. The whole point of going to zero DTE is because we have a definitive edge with the exponential increase in premium decay near the end. That's what gives us our primary edge. So why would we go out further and lose that edge? It makes no sense. Hans says, I would prefer to write that. Okay, I'm not sure exactly what he's saying there, but that's okay. JP, what is your take on fib lines? Fibonacci he's referring to. Yeah, Fibonacci, Elliott wave, all of that stuff is bunk. It's numerology. It means nothing. Sure, there may be some, so many people that are out there using it that it maybe become, I don't know, maybe they force the market there, but I don't believe that at all. There is no edge in Fibonacci or Elliott wave. Ralph Nelson Elliott was a numerologist. Basically into astrology and that sort of thing. So, it is totally inconsequential. Most people who are Elliottians, they make themselves look smart because after the fact, they can take their Elliott wave and curve fit it to virtually any market condition. And so they'll say that they're always right. So yeah, and trust me, I've been involved in or written thousands of algorithms around those type of things: technical analysis, technical indicators, fib, Elliott wave. It's all crap. All right, Vadim, how you doing? And Jago, good afternoon. Let's see, did I get that in there? Yeah, there we go. And Is in the house. We have, I don't know why I'm having problems clicking. Ken's there. He goes, 200 plus wins today. Awesome. How you doing, John? John Kogo. And the Rambo 911. How is your butterfly course coming along? How can I get the 50% off your yearly? You join. It's just join, and then you'll see what it's all about. And Luthor, when is it better to trade last hour of trading? Around 35 minutes, 3:35 seems to be the average when we get into it. But today, I don't believe there's going to be a trade. Sorry about that. Mini vacation. That's a great name. Is that almost like a permanent vacation? Hi, what's the trade today? Let me go through the roll call first. How you doing, Jim Seraphin? So we're not doing a final hour trade? I don't know yet. Maybe. But so far, it's hard to to peg it. The prices, the market is just sort of hanging out there at one level. It's not moving, and I don't expect it to move. When that happens, it is almost impossible to put on an asymmetric trade, and that's really the problem here. Mr. Skatebox09, how can I get TD to give me level 2 in spreads? Every other brokerage has allowed level 3 except for TD. It all comes down to how you answer the questions on the application. That's all I'm going to say. It all comes down to how you answer the questions on the application. Besides that, let's say that you've already been granted level 1 or 2 or whatever, and you want to advance to level 3. They have courses that you can take and earn credits. And if you talk to them, these courses take about a weekend to do. Once you complete those courses and earn the credits, they will give you level 3. All right. Anton, when will your super promo end? Never. I mean, I don't know if you've figured this out, Anton, or not, but the entire 1 hour final hour trade show is all about what we do here. And we give away trades for free. I can't tell you when we're going to have a trade. But lately it's been difficult at the end of the day because we've been consolidating at the end of the day. And when that happens, it pretty much takes away the trade. Hey, how you doing, Dan? And another Dan Benjamin. Rambo, you are getting a much better special discount than I. Go for it. I didn't know that 0 DTE decay is exponential. It is decaying at an exponential rate as it gets closer and closer to the end of the day. It's not linear at all. As a matter of fact, I would say 50% of this 8-day-old contract is expiring or decaying in the last few hours of the market. So why would I go 3 days, 4 days out to try to get that 30% extra and have all that time risk when I can just wait until the last few hours? We just hit a new high today in the last minute. Yep. And Andrew Watt, how you doing? I just joined the trade, bro. You won't need 50% off because you'll be like 500% up. Yeah, I know. But sometimes that's what it takes to get people to join, I guess. until they realize that, hey, a lot of times, people that join the trial, they make enough to pay for several years of the service. And North Cal Joe, what kind of starting capital to safely get started with zero DTE? So that's a very good question. Let me just take a quick look at the market, and then I'll answer that question. Oh, yeah, look at that. We just took off another new high. With 15 minutes left, let me take a look at this. At this point, I would say that, we're just not far enough out. I think we're going to settle at around 41.80. So unless you think that placing a trade at 41.80 is a good idea, put on a put fly. But, I wouldn't do it. I wouldn't do it. All right, so back to the question. Let me see here. Get back to here. What kind of starting capital to safely get started with a zero DTE? So I've done an exhaustive study. I created a simulator that simulates how I've been trading over the past few years. And it simulates every aspect of the trading depending on what size of account you have. And what I found is that if you start with a $2,000 account, there is going to be, because of the size of the account and the size of positions, what I do is I set a 50% loss and call that a failure, right? On a $2,000 account, you'll fail about 33% of the time. On a $3,000 account, you fail about mid to low 20s. On a $4,000 account, mid-teens, 15, 16% of the time. On a $5,000 account, it drops way down to like 5% of the time that you'll fail. In other words, you would draw down from 5,000 to 2,500 about 5% of the time. Anything over that, and it's highly unlikely that you'll draw down half of the account. That's what I found. Now, last year I started with a $3,000 account, and I guess you could say I got lucky, because I had about a 25% risk of failure, and that was using the E-mini S&P, which has a much higher commission structure, but I was able to take it in 9 months and triple the size of the account. So, of course, I'm an experienced trader, and maybe my odds of doing that are much better than others. But those are the numbers that I found. All right, let's take a look at this. Where are we going? Why is the market taking off? There's the big question. See, our next destination here is T0. Now, tomorrow we have the Jackson Hole conference, and Jerome Powell will be out there blabbing away about maybe giving a little bit more detail to the narrative that he left with us the last FOMC meeting. Typically, after a Jackson Hole conference, the market does go up. So this could be the market just sort of front-running and pricing in the conference, because generally at that conference, they're going to come out with something how they were all going to save the world, right? And everyone's going to believe that, and how they're going to create more accommodative monetary policy, or at least allow the markets to have a clear path where they're going to be going. So, and so for that reason, markets usually go up after the conference. Now, will that happen tomorrow? I don't know. Maybe this rise in the market today, like I said, is front running that conference, and then that's it. Maybe we just fall right back down, or maybe we go another leg up. I have no idea. But that's what it looks like to me, that we're front running the Jackson Hole and anticipating at least some positive commitments by these central bank heads. Now, it's kind of ironic when you think about it. All of these guys actually caused the problems that we're in, because they're Keynesian economists, and what they do, they believe that constant intervention into an economy is how you actually stabilize it. Of course, that couldn't be further from the truth, but that's what they do. So they're there to try to monetize the spending, the overspending of governments by creating new debt. And once they overshoot that and create inflation or create some other kind of contagion, they're tasked with then providing some sort of monetary policy where they manipulate interest rates or the cost of money to try to either stem inflation or bring it down or whatever they think that they're doing. They always underperform and overshoot, always, causing us to either slip into or maybe draw back from recessions. So it is all, inflation in and of itself is all government spending. I mean, it is literally caused by government spending. It's not caused by the natural fluctuations of markets. It's all of us humans trying to take in life what are squiggly lines and trying to straighten them all out. In the words of the great Alan Watts, we're just a sack of flesh and bones, and we try to take squiggly lines and straighten them out. Of course, we're much more than that, but I think that that's what they believe that we are all. So, that's my prognosis. That's where I think we're at. Now, if there was a trade today, I'd say that we're going to probably revert back to where we are now. And I'm not going to call a trade today because I think that it's not worthwhile. We're sitting here right on the LVN, which is this green line, and we've been knocking on it several times. We've been rejected several times, once, twice. Now this one time where we've made it through, but we're not advancing anywhere. If we were advancing, price would accelerate towards the next volume node, which is T0 up here at the top. But it's not. It looks like with less than 10 minutes to go that it's stalled and likely to come back down under here. And the market right now is not willing to make that impulsive move to the next level of value. Instead, it will probably end up consolidating here. And that's really what I had called from the beginning of the week. I felt like we were going to consolidate on T1 until Jackson Hole. Now we're just less than 24 hours away from Jackson Hole and all of these big heads out there and whatever weird things that they're cooking up to introduce to all of us slaves of the system. So that's where we're at. Let's see. All right, let's do this. Where do you think price is going to go? Is it going to go up or down from here? I'm calling 41.81 for the end of the day. So I'm sorry there wasn't a trade today, but it just wasn't in the cards. We've had this little blip up, but there's nothing to backstop it. The only thing to backstop it is the LVN where it came from at 41.80. And or to go all the way up to the volume node T0, which is a major node. And I don't see that happening in 6 minutes or 5 minutes. So what say you? Are we up or down from here? Are we above 195 or are we below 195? I say 41.80. That's my call. Although that's a 15-point drop. I don't know. Can it do that? Nobody wants to take a shot at it, huh? No one wants to stick their neck out. All right. Me says 41.87. He splits the difference. And John Montalbano, was there an earlier trade today? Yes. In the service there was. There were two trades, and they were both good-sized winners. Yep. in the service. There was two very, very big winners. All right, Iz says 42.03, so he's going higher. Ken is going to 41.90. All right. Craig just says lower. Okay, it is kind of a binary choice. But you don't win any prizes for just saying lower. See, whoever comes in first wins the grand prize. All right, so John's saying 41.95. So we have a little less than 5 minutes to go. I am really surprised at the move today. It really did. I thought that at best we would find some sort of more consolidation between the LVN and T1. But look, it looks like it wants to go up. It really does. I don't know why. Why? Vadim says 41.87. Yeah, I'm starting to lose confidence in the 41.81 because it is going up, just, crawling higher and higher. Robert Weitzer from Austria. I hope I win with under 41.80 bear call. Yeah, it's looking like less and less of a possibility. I guess, what have they got to lose? Like I said, historically, the Jackson Hole Conference produces positive markets afterwards. So that's what I think is going on here. I think that they are front-running that idea. We're going into a weekend, and they're front-running that idea. Dan says 4,200, which is probably, I guess the longer you wait, the more accurate you can be. And Mr. Skatebox 09 getting good short position for Powell tomorrow. That may be true. That may very well be true. Diesel Viper, I had my first profitable ES0 DTE butterfly today. Clap for me. Yay. Good for you. We love it when people win. Yeah, this is, for me, this is a total surprise, this move. A lot's going to happen between now and the market opening tomorrow. So I have a feeling that once the market closes this afternoon, this is all going to be sold off and take those profits. Drag the unsuspecting retail traders up and then dump them. So we have less than 2 minutes to go. Those 41.85 SPX calls were 25 cents an hour ago. I know. Yeah, I had said get out a little while ago. They would have paid off handsomely. So we went through 2 winning trades today. That's the cool part. We went through both a bearish and a bullish trade today. All right, less than a minute to go. Here we go. Let's see. We need the volume up. So what I'm saying that after the market closes, it's going to sell off. That is my guess. But it's going higher. It's going higher. There's a VP note at 4,200 and the fourth one. Yeah, in the 4-hour long-term chart. Yeah. It's a minor node, though. All right, so we closed right at about 4,200. Maybe that was the goal. Get to 4,200. All right, back to the big head. All right, now apologize that we didn't have a trade today. It just didn't make a lot of sense. And that last few minute market heroics, I don't know how you trade that, how you choose a point out in the middle of nowhere. You know, how do you say where is it going to end out in that sea of nothingness between the LVN and the volume node above? It didn't make much sense. So that's the way it goes. And so we'll be here tomorrow. Tomorrow's going to be an interesting day. It'll be our final hour trade for tomorrow. And man, we're racking up. This week, we've had 3 non-trades. And that's the way it goes, you know. That's part of trading. In order for us to have a trade, we need an asymmetric setup. And there wasn't any. I didn't foresee this move coming at the end of the day, and I have nothing to peg it on, so it wasn't worth the trade. I don't know where you would actually put your fly. There was no reference. So there you go. Tomorrow, let's see. Dan saying, how can I change my username on your YouTube sessions? I have no idea. That's a good question. I think that is your YouTube name when you join. And I believe you can change your display name in YouTube. Pretty sure you can. All right. All right. We're done. Thank you very much for showing up. Peace to you all. If you want to join our service and learn about trading the final day of expiration, then go to 0-dte.com/try. Thank you very much. Peace. See ya. All right. Where's all that good stuff? There it is.